when we were introduced to DPL through our relationship with Black Diamond, it was very exciting.
Learn why Black Diamond firms leverage DPL and how the Advent Insurance Marketplace helps advisors compare annuities and choose commission-free solutions for clients. You're listening to Advisor Revelations.
Welcome to the Advisor Revelations podcast. I'm Rob McGoodwin, a consultant here at DPL Financial Partners. On today's episode, we'll be discussing how Black Diamond firms, like our guest today, are using and implementing the new SS&C Marketplace suite of DPL's commission-free solutions and discovery tools. We'll also be talking about how we work with firms to implement referral programs for their members and how to generate guaranteed income strategies in their retirement plans. Rob Santos is here today, and he's the CEO of Arrowroot Family Office. Rob, thanks for joining us today.
Thank you so much, Ross. Really excited to be on with you today.
Yeah, I appreciate you taking the time. Before we get started, tell us a little bit more about yourself and about your firm, Arrowroot Family Office.
Sure. So I've been in the financial services industry for over 20 years. We launched Arrowroot Family Office in 2013, and the name Family Office really represented two things. One was it managed our own money. So the professionals at Arrowroot, it was a place that we could pool our capital resources together and it could act as our own family office. But it also meant broader services than what were being offered to a lot of wealth management clients at the time. Since then, we've grown. We have multiple offices around the country, SEC registered investment advisor, and a fiduciary.
Thank you for sharing that background. You mentioned broader services for your firm and for your clients. And would love to just get from your perspective, your experience so far as a member. You've been a member of DPL for going on a year now. And before you partnered with us, you mentioned that you were looking for a potential fiduciary implementation and approach to insurance and annuities. How was DPL maybe able to fit that void for you? And how did you become a member?
Sure. So I think I'm not alone with a lot of registered investment advisors that were riding this wave of going to a fiduciary standard as opposed to a suitability standard. So instead of going through broker-dealer, and through that process, it's a really highly compliant, high threshold for the services that you can be able to provide to your clients. Insurance is obviously a very important part of everyone's financial plan, be it from a protection standpoint or a tax planning or a retirement planning standpoint. Before we were introduced to DPL, we had made some relationships with various insurance agents that we knew and we trust, but they were still being paid pretty hefty commissions, and it put a lot of strain on us to make sure that we were doing our fiduciary duty. We also are a small firm, so we didn't have a lot of that in-house expertise to really dive deep into a lot of these things. And so when we found DPL, it was really a wonderful moment. The ability to be able to harness the brain power, the compliance framework, and the tools and the products that DPL was able to provide in a compliant and fiduciary way for our clients was really, really wonderful. The second thing that's happened to us is, and it's happened to everyone, not just RIAs, is interest rates are so low. So if you want to be honest about having retirement conversations with people, the traditional conversation of a low risk portfolio that can provide income for people into their retirement years is a very, very difficult conversation if you're being 100% honest about it. So annuities and some of these other life insurance products really can be a benefit to our clients. And I think a lot of advisors know that, but we're very hesitant to get into that space, primarily because of compliance and their lack of internal resources to provide that service with a high quality. So DPL really solved that issue for us in a big way.
Yeah, I think that's I think you really hit around the head in that a lot of advisors who are truly taking that fiduciary approach, they realize that, it's currently a problem with interest rates and looking at retirement income. You're not getting as much as you typically would out of fixed income or bonds. And a lot of firms as a trade-off are really being forced to introduce a lot of risk into the portfolio to generate enough income in retirement, which creates really some new challenges and issues. So we do want to approach things from really educational standpoint. Landscape's changed a ton over the years. That's where we want to really help RAs see where the industry is going and some new solutions that now can be a part of your arsenal that in the past would have been completely off limits. You mentioned you want to give clients the best option and you want to take an objective approach. So with our model here, we've been able to really introduce new concepts into the financial plan that are now fee only, including guaranteed income. With our recent release of the SS&C insurance marketplace, as you can see, there are a lot of low-cost options that can still solve for lifetime income and retirement. Can you share with us what new solutions have maybe stood out to help solve for that longevity risk and a little bit about that diligence process that it took to start with a client and then find the right solution to meet their needs?
Absolutely. And Ross, I think you just said it earlier, which is because of that compliance threshold for so many advisors and running their Monte Carlo simulations or running their retirement scenarios with such a low interest rate environment, it has really forced the older generation to take on more equity risk in order to make sure that they're going to be able to potentially fulfill their needs later on in income. And you can explain that as best you can, but discussing that risk, saying we're going to take on more equity risk because we're going to try and get some more return, that sounds great. But the other side of that equation is looking at major drawdowns in the market and saying, well, this is what could potentially happen. And we have no guarantee of how long that bear market or the drawdown may be is a very difficult conversation. And so to your question of what we found to be very useful is that retirement income solution in your all arsenal over there, being able to show with confidence to a client that there are income solutions that are available for them and they don't have to take that kind of equity risk. And then having the team at DPL, as you mentioned, as an educational resource, not only for our clients, but for the advisors and for the different personnel over here at Arrowroot to truly understand the why of why we're doing some of these things for the benefits of our clients. And again, now that this is a non-commission platform that really unshackles us to be able to say that we are acting in the best interests of our clients. And frankly, I think it's something that many advisors need to take a look at, given where equity levels are and where interest rates are, and given the demographics of an aging population that is either in retirement or about to go into retirement. So I think it's a very important issue, and I think it's a very important solution that you all are providing. The other is the variable universal life product. Every advisor reads about Roth IRAs and the benefits of those, or you're deferring to your Roth 401k for the tax benefits there. Although it's not the same, there are very similar characteristics there that can be able to really assist people to put capital away and invest it in a thoughtful and seemingly low-cost solution that are very tax-advantaged. This toolkit of insurance and annuities that only really made sense for a lot of advisors for their ultra-high net worth people. This has now opened this up to a much wider range of population, and I think that's a huge benefit for our customers and differentiates us as a business, because there's still so many people in the industry that are really kind of laser focused on the traditional asset allocations. And a lot of that is fear and lack of education. So it does differentiate us as a firm, and we found it to be very powerful.
A lot of these solutions, they historically have been off limits, or they've only been in the hands of commission-based agents. So now that we can take a fiduciary approach to looking at them, you can really pick out the right clients that meet the right criteria, like the client we worked on with the Clearline fixed index annuity. They want to take some risk out of the portfolio, and it probably helped a little bit to be able to have that guaranteed income to maybe also invest that money differently outside of the annuity, right? That's another angle to it, is that some advisors would like to get some equity exposure, but it's really risky to do that with also kind of the income bucket of the portfolio. So that's part of the equation as well, is being able to provide stability. That way you actually can be more heavily invested to equities outside of that fixed income universe.
Absolutely. Looking at the fixed income allocation, there's been a lot of talk about the 60-40 portfolio being dead. And I don't necessarily think that's true. But if you do look at that allocation and you see how low interest rates are and the potential downturn of your fixed income market values if interest rates were to go up, that's a very scary situation to be in. Some of these products, by providing that retirement income and also doing it in a flexible way, like you said, where you might be able to continue to get retirement income with a very high degree of certainty that you're going to get a certain amount of income, but you can also then put some other options around there according to the risk profile of the client, where they can also get some equity-like returns as well. And it certainly gives you a lot more freedom from an allocation standpoint to allocate outside of that annuity or fixed income allocation to focus on the equity returns and that risk bucket a little bit more.
Yeah, no, I think that's really important, and maybe a side of it that a lot of RAs kind of overlook there. I do want to, of course, talk about your partnership with Black Diamond. We, of course, have a partnership with Black Diamond and their RA firms through this marketplace. And I know technology has played a huge role in your firm, especially recently when it's also come to utilizing our tools, looking at annuities and modeling them into your desktop there. But how did your firm choose Black Diamond originally, and what has the experience been so far to be able to integrate the annuities into the client view portal?
Yeah, one of the major shifts, obviously, in the last 10 to 15 years has been this technology and software revolution, and it's everywhere, right? It's changing all kinds of different industries, and it's been changing ours as well. Looking at robo-advisors, looking at Bitcoin and explosion of ETFs and different products and services and technology. We were a very early adopter of Black Diamond right from the beginning of the firm. And the primary reason we were for Black Diamond was it allowed us to do a lot of things that analysts used to have to do on Excel. So, software as a service is a very, very powerful thing. So we've always tried to be ahead of the curve in adopting these new enterprise software solutions that make us more efficient, make our process more transparent, make us more compliant, and ultimately give our clients a better user interface and experience. And Black Diamond has really been able to provide that. We also work with Orion. We work with Redtail. We work with Right Capital, eMoney. So we work with a lot of different software providers, and the integrations of these things is really, really exciting. So when we were introduced to DPL through our relationship with Black Diamond, it was very exciting because not only can we be able to offer these products and services in a very high quality, highly compliant, highly fiduciary way, but now that can be able to tie into our clients' overall asset allocation, performance conversations. When they log in, they can see the values of these things. It makes it much easier for us when we're doing our client reviews. And so that's just an added bit of frosting on the cake, and we're really excited about it.
Yeah, it's fantastic. And we've also looked to be able to add some different resources and tools to help not replace, of course, our team's analysis and our support, but give you some great resources to really automate the review of existing variable annuities, and then the discovery of where guaranteed income in the portfolio potentially makes sense through our fixed income comparison calculator and our guaranteed income analysis calculator. So I definitely look forward to hearing about your all's implementation of those tools as well as you get more familiar with the resources through Black Diamond.
100%. As these resources become readily available, they'll make us more efficient. They'll make DPL's business process more efficient, I imagine. And It will allow us to get more real-time evaluation and analysis to our clients. So either during meetings or before meetings or after. The one other thing that comes to mind that's an enormous benefit to us, and as well as a lot of our partners. So we work with a lot of accounting firms. We have an accounting firm affiliate program, and a lot of these accounting firms are moving towards a holistic kind of family office model. And one thing that really stands out and has been great for us is in that initial client onboarding questionnaire, or while you're gathering information, asking the clients if they have any existing life insurance policies or annuities that they would like a review of. And I would say historically, most of the time when we did that, they were sold through a commission broker. And many times we didn't think they were very good. So, most of the time we would just say, well, for a lot of reasons, think you should get out of this. But now that when we get those, we have a trusted partner like DPL that we can send to them, and they can give us back relevant analysis to go back to the client and data to show them either why it's a great policy or why they should think about maybe doing something else is really, really powerful. And as you all start to roll out more of these self-service tools, it's going to make us better advisors. It's going to make my staff better educated and better suited to service their clients, which can only be a good thing for everyone involved.
Being able to really streamline that education process and that analysis process will, of course, improve efficiencies, but allow an entire firm to be able to quickly be able to see where there are improvements that can be made versus current policies, or maybe improvements to financial plans through some of these resources. So we're definitely excited about that. Just really with your program, Wealth Management Forward, where you're working with these CPA firms. I'm sure in the past it probably was a little bit of a headache whenever some of these CPA firms out there would bring those existing policies. So just having a partner that can look through those and be able to quickly give you feedback, I hope will make that process a lot smoother. And instead of it being, maybe something that was more of a headache, it can now be something that's an advantage, hopefully, versus, some other firms out there that might be trying to help them out. Absolutely.
And a lot of advisors that have not come over to the fiduciary side, just purely the RIA side, or maybe dual-hatted with a wirehouse and are selling insurance for commission, I think that is probably going away at some point, if it hasn't already largely in a big way. So, for advisors, it's absolutely a thing that they need to be focused on, and a huge advantage for them. The other thing that we're seeing is new industries such as CPAs who are entering into the RIA space, either through affiliation or actually starting their own RIAs. A lot of them are very, very scared of adopting new technology or new service offerings. And so we spend a lot of time helping to demystify them after you all have demystified us about how, working with someone like a DPL is only a real benefit for them, and really supplying a kind of back office expertise, very high quality service and product offering that's easy for them to implement and start to change their business towards a future-facing business, as opposed to just a compliance, backward-facing transaction business. And I think we're going to see a lot more of that going forward.
Yeah, I think that's some great insights there. And it's become more of a norm for a lot of professionals to have to be able to expand, their opportunities and their service capabilities. It's really rare that someone, is solely just looking at taxes, or a financial planner just provides financial plans or maybe only handles the investment management side. You're really now today with all the advancements in technology and with wealth management, for some becoming a little more commoditized, there's more of a need to really think more outside the box about how you can add value and be able to address multiple areas of the plan. That way, these relationships can be hopefully a little stickier for you, and maybe, really add some more value over time. So definitely excited about the opportunities there. We've also been working on a training and module suite online. So I think that will really be an exciting aspect to this whole relationship, is to quickly give your CPA firms a lot of resources, right at their fingertips. So tell us a little bit more about that aspect of the training element, and really being able to, again, streamline this relationship to these other advisors you're partnering with?
The whole purpose of the Wealth Management Forward program was to advise these accounting firms that either by need or desire needed to change their practice to a future-facing model. Using the word you just used, which is commoditized, we've seen it in the accounting space with all of the online, very low-cost tax providers really eating into that industry in a big way. We created this program to help a lot of those firms elevate their practice. And we do that through a number of ways. And one of them is through our learning management system. The real focus of that learning management system is to be able to open the eyes of these firm owners to how much the world has changed in the last 5 years as far as technology, service providers, potential partnerships, and show them that lift is not as big as they think it is. You know, a lot of CPAs are still traumatized by their CPA exam and the requirements that they needed to get their CPA, and that this can be able to not only increase their revenue for their firm, but also help to drive their traditional business better, because if their clients are getting better services and better advice from their accountant, they're going to tell people, same as on the investment advisory side, and that should be able to help lift their other business. I'm sure you all really enjoy it when you see the light bulb go off in a RIA owner's head when he sees the benefit of it. And we absolutely love seeing it when our accounting firm affiliates see it as well.
Yeah, it's great. And I look forward to the potential with that partnership there with that program. I think there's some great opportunities. A lot of the advisors ultimately tuning in, listening to this, are going to also be Black Diamond users, and they might be still, really green on looking at insurance and annuities, which is understandable if the landscape has been commission driven for so long. For those advisors that are really, maybe not yet working with DPL, but are part of Black Diamond and this whole program through the Advent Insurance Marketplace, what would you share with them as something that you were surprised by or glad to see maybe has finally changed with some of the products themselves or this entire part of the industry?
My first piece of advice is to pick up the phone and talk to you all. We find it very valuable when we are looking at a new client or we're looking at a situation where a client needs a retirement income solution or is looking for other kinds of life insurance solutions that can fit their financial needs and profile. And we found it very, very useful. Send in the simple form that you guys have to intake. They can put their skeptical hat on, ask all the questions, and then have an open mind about what you all are showing them. And I think if they do that, they will start to see the benefits very quickly. So, similar to what we tell our accounting firms is, don't think you have to become an expert at all of these things immediately on the first day. Just get started.
It's not going to be just one conversation, but have an open mind and seeing how, hey, the landscape's changed. There's a reason now to take more of a proactive approach. As you mentioned, the benefits are going to come to the table for them, whether it's leading to cost savings, whether it's that guaranteed income that really could help the plan. And, RAs maybe could have that moment of realization that this is something they shouldn't shy away from, or also just being able to expand services and revenue opportunities. At the end of the day, being able to expand that fee-only revenue fiduciary approach is going to really be a great win-win for clients because the solution is going to be more efficient versus the commission-based alternatives. But now your business can also have a whole additional area that you can leverage. And in the long run, we think that will pay great dividends.
Absolutely. And for those advisors that are really focused on the financial plan and the asset allocation, things like the variable universal life policies that allow you some flexibility into how you're placing in the investments within that. Now, how that speaks really well with Black Diamond and how you're allocating the whole portfolio and for the client is now much, much easier than it used to be. Right. It used to be if you were doing some of that through a broker or through someone else, you'd have to get the statements, copies of the statements. You'd have to input them manually. You'd have to then rebalance. It was just, from an operational standpoint, it was much harder. harder. And one thing I would suggest to new advisors looking at this is to say a lot of that can be alleviated not only through the expertise and the service that DPL is offering, but through the partnership that they have with Black Diamond. And that's very powerful.
Yeah, absolutely. I think that's really important. And as a Black Diamond firm, you of course can get complimentary access to our membership. So it's really just a great opportunity to get started and see how we can hit the ground running right away. Rob, thank you for joining us today. I know we covered a lot of important topics, and hopefully this will be really helpful for other advisors. Anything else you'd like to leave with these advisors before we break for the day?
I want to thank you, Ross, and your team for being such a wonderful resource with us since we started working. It's really, really been a pleasure. And we're really excited about everything you all have been doing and very grateful for that. And, looking forward to continuing to work together for much, much longer here.
Yeah, thank you, Rob. Appreciate your partnership. I look forward for things to come. I'm really proud of the clients who've been able to help thus far and being able to enhance some of the capabilities there. But overall, I know we'll do some great things, and I look forward to not only the growth of the partnership with your firm, but of course with the Advent insurance marketplace overall. So thank you for your time today, and I look forward to talking soon.
Thanks so much.
Thanks for listening. To hear more, go to dplfp.com and subscribe on Apple, Google, and Spotify for updates.